Good afternoon, everybody. Welcome to our Short Verticals webcast. I'm Connie Hill. Happy that you would join me here today. We get together every Thursday at this time and discuss short verticals. And really, we've been repeating a process. Now, how many of you feel like I'm getting the process down? I know a little bit more what I'm doing, but I don't know where to look for stocks. Sometimes that could be the case, all right? So what we're going to do today, one of the major things we're going to do right at the beginning is we're going to update our watch list. And several of you have actually requested that we go through that process, and it's been about a month. So we're going to go through it, update our watch list here today. And that will hopefully fill in that little piece for you where if you're struggling for certain stocks to look for this strategy. Now, I am joined in the chat by Kevin Horner. Happy Kevin's here. He's a great veteran of the markets. As you have questions, go ahead, chat those in. I'll keep an eye on the chat. There may be some things Kevin might have to catch for me. Appreciate him being there. But we do want you to get your questions answered. Now, if you have questions and you're listening to this on the recording, then what you want to do is put your question in the comments section in YouTube, because I go back and look at those every day. Make sure that you get your questions answered as well. All right, let's go through our disclosures. I've got a pretty packed show for us here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes only. Don't consider it a recommendation. We will be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. Investing involves risk, including the loss of principal. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. That's really important in this class because we are selling options, okay? One thing that's different about Paper Money and your live account, Paper Money will not assign you early. But in a live market, you absolutely could be assigned early. So we want to help you make sure you are familiar with that. Past performance of any security or strategy does not guarantee future results or success. All right. This class is an intermediate level class, but I want you to be able to follow along, especially if you're somebody that maybe has been exposed to short verticals, but you don't feel like you've really mastered it, okay? Make sure you go through Cameron May's class on getting started with options, where he goes through short verticals. He'll do a bullish version and a bearish version, okay? Get really comfortable there, and then I think you'll be able to follow along just fine. Now, I don't want anybody to take off. Absorb what you can, even if you feel like maybe it's a little bit higher level than what you might want to do. We're going to look at a lot of example trades here today. We always like to follow up on some of our existing trades because that's how you learn, right? We place example trades, we learn how to manage them, certain things come up and we can work through it together. But if you're not placing example trades in your own Paper Money account, it's a little bit harder for you to catch on because you're not seeing real-time situations take place. Okay, so I would encourage you to do that. Now, I mentioned at the beginning, we're going to be updating our watch list today. Some of you are excited about that and have been wanting to get back to that, so we will. And I want to talk about one thing here as far as, well, what do we want to look for? Okay, if we're going to go out and build a watch list, what should we look for in the candidates? Okay, for something that's bullish, and we've been in a bullish market, right? Stocks that appear to be in a bullish or a neutral trend would be appropriate. So something that's downward trending, nah, we're going to leave it alone. Stocks with higher trading volumes. Why is that a big deal? Well, the more trading activity a stock has in its stocks, the likelihood of us finding lots of open interest is more correlated to that. Okay, so if there's a lot of trading activity, we can find it there in the options typically. And so we want there to be higher open interest, and we can look at volume as well. I keep that as a column out in my Thinkorswim. And the result of that, if we've got a lot of trading activity, the result of that is we have what's called a narrow bid-ask spread, meaning the bid price and the ask price are pretty close together. In an ideal world, we want to keep that as low as possible. I mean, if it were 2% or 5%, we would be happy campers. Sometimes it might creep up where it's 8%, maybe 10%. Some people will draw the line at 10%. They're like, ooh, that is not liquid enough for me. If I'm having to hurry and make up 10% just on the spread alone, they might avoid that altogether. Okay, so we're going to be looking for that as we rebuild our watch list here. Now, one last other thing, and this is something we haven't dwelt on a ton, but what kind of an entry signal do we want if we're doing a short put vertical? Well, if you go back to your stocks knowledge, there's a lot of things we can use, okay? One is that trend first and foremost, okay? We need to make sure that the stock that we're dealing with is in an uptrend. We need to make sure that it has, I'm going to say, a decent entry, okay? Some might look for this, the close of, oops, I drew through that accidentally, close above the high of the low day, right? We can look for that. We also might want to look for breakouts. Breakouts of what? Breakouts of resistance, breakouts of price patterns. Sometimes we'll see flags. Sometimes that might be helpful and useful. But so we might be looking for the breakout piece and the bounce piece. On the bounce piece, it could be something like we're seeing down here in the graphic. We've got some horizontal support down here. We see some more additional support right there. Or the breakout piece, right? The stock's been trying to get through an area of resistance. Maybe it's having a little bit of a hard time, and then boom, it pushes through. Usually lots of volume comes in to help that take place. And so those are going to be really typical things we're going to look for. Okay, so in our process, we've got the kind of stocks we want to look for, which we're going to go update right now. And then looking for entry signals. Now, I'm going to say one additional thing here. When we are talking about swing trading, Mike Fairborn teaches swing trading. In fact, I can't remember, he might have been just before me today. On swing trading, we are need to be in right at the best spot, right? We want to be in right at the Caholt. We want to be in, boom, just Jane and Jerry on the spot as we can possibly be. With a short vertical, we get a little bit of a break. We don't have to be Jane and Johnny on the spot, but we still want to look for a good entry. And we're going to talk about that in a couple of our examples that we're going to look at here today. Now, let's hop on over to my Thinkorswim. And where did you go, Thinkorswim? I think this is it. Yes, this is where we are. And let me get rid of that big old pencil. We're going to need our calculator. And we're going to start out with the process of creating this watch list. Okay. I'm going to come out here. Oh, I meant to hit, that's not what I meant to hit. I wanted to come out here and hit reset. Okay. We're going to build this step by step here together. And then we're going to use this watch list for the next four or 5 weeks. Okay. It's not that complicated of a scan to do, but let's walk through it. Now, the first thing we're going to do here is we want a price, and we're going to change the stock filter here to be the last price. We're going to put in a value in there of 40. And the reason we're using 40, although you could go lower if you wanted. If you wanted to use 10 or 20, something like that, you absolutely could. This watch list that we're building, we want to use for both bullish and bearish trades. And so on the bearish trades, it's nice if they are at least $40 to begin with so that there's some room for them to drop. If they're already sitting down at $15, $10, and they've been dropping down, they don't have a lot more they could drop. Okay, so that's why we're going to start it at $40. All right, volume. If we use the volume filter here from stock, it'll just be today's volume. And so if you're running this scan in the morning, you might not get the volume that you might be looking for, that you need. Okay, so we're not going to use this volume, although, yeah, it is a little bit later in the day as we're having our class. But what we're going to do is get rid of this. And then we're going to say here, we're going to add a filter, and it's going to be a study filter. The study filter only works on your live side. It does not work on your paper side. Okay. That was an extra one that just came on there. So let's go ahead with our study. We're going to get volume. We're going to do average volume. And we're going to say not in the last 50 days, but we're going to go in the last 20 days. So kind of shrink up that time frame a little bit. And the default here is 1 million. And you could use 1 million if you wanted to. That's not a problem. But we are going to use 2.5 million. Okay, so we're saying, yeah, lots of activity. Let me count my zeros, make sure I've got this right. We got 3 zeros and 2 zeros and a 5 and a 2. Okay, there's our 2.5 million shares. Now, if I just ran this right now, I'm going to change my results to 200. We're not done with the scan yet, but I want you to see how many stocks would come back that are just $40 at least and have that average trading volume of 2.5 million. Okay, it's going to bring us back 301. Now, 301, that's a lot to keep track of. Okay, so we are going to do some further filtering here. And so we're going to say, all right, let's look for stocks that meet this criteria and are also on the S&P 500. Those typically are larger stocks, larger cap stocks. Many times they have a lot of volume with them. And so we're likely to find some decent candidates there. So where it says here, scan in, we're going to say, we're going to come down here to a public watch list, and we're going to choose S&P 500. Okay, so now we'll be looking at a subset of the S&P 500. Has 2.5 million on average and $40. Okay, we're going to add one more thing to this filter. And this is actually somebody suggested it in here that we should do this. And I liked the idea, and that was to intersect it with penny spread options. Now, that's a public watch list. We don't have to maintain it. Okay, Thinkorswim folks do that for us. So we're going to intersect with the public, and we're going to look here in this area. We're looking for penny increment options. And really what that is a list of stocks that trade in pennies. Sometimes you'll see, something going for $1.42 by $1.46. Like, oh, good, that's in pennies, right? That'd be like 4 cents difference. We would love something like that. That doesn't mean they're trading in 20-cent increments or 25-cent increments. They're trading in smaller increments. And since we need to whittle down that list of 301, great, we're going to look for that liquidity. All right, so there we go. Very good. Let's go ahead here. Kevin's helping me out in the chat. Thank you so much, Kevin. Let's go ahead. We're going to hit scan again. And it's going to come back. Okay, it's whittled our list down. Instead of 301, we've got 111. Okay, that's a decent number to work with. Okay, we're going to save this watch list, and we're going to use it for the next 4 weeks. So we're going to come out here, click on this icon. It's not a complicated search to build. If you wanted to, you could come out here and save it as well. Okay, you could come out here and save the scan query and give it a name like short verticals. That's what we're going to call our list as we save it right now, or whatever makes sense. And I do want to tell you, you can use this for a lot of other strategies. It's not limited to just short verticals, okay? Yeah, because the criteria of the stock we're looking for could meet a lot of conditions, okay? So you can save that if you want. We're going to come over here. We're going to say save as watch list. And I'm going to call it something similar. I've called it the last little bit. Oh, let's get off cap locks. We're going to call this SV class, short vertical class. And today's date is July 24th. Here in the good old state of Utah, we are celebrating our Pioneer Day, which goes back to the days of 1847 when settlers first came out to this desolate area and started some civilization out here. All right, so July 24, we're going to hit the save button. Now we're going to add to this list, okay? I'm going to come over here to where it says watch list, and we're going to go pull this watch list up. So it's going to be our personal, and it's going to be under S. Let's see if my SPs are here. Oh, look, it's the very last one on here, short verticals class with today's date. Okay, now this will have those 111 stocks. Cha-cha-cha, all right. There's our look at it. I am going to, since you've seen how this looks, we're just going to go ahead. I'm going to share this list with you, but let me wait till we build the next list, then I'll share that with you. We're going to augment this because we want some NASDAQ stocks in there, okay? And so instead of intersecting here with the S&P 500. We're going to change it. We're going to do NASDAQ 100. Come down all the way. We're going to choose that. And we're going to come up with about, looks like 39 stocks that also are at least 40 bucks, 2.5 average volume, that are trading in penny increments and are on the NASDAQ 100. Great. We could, if we wanted, save this as a separate watch list. However, I want to combine it with the S&P watch list that we just created here. So we're going to go an extra step and we're going to export this to a spreadsheet. Now, for you, have your spreadsheet open before we hit export. Okay, I do have this blank spreadsheet open. And so what we're going to do is we're going to come up here to this little stack of pancakes menu item. We're going to hit export. And we're going to say to Microsoft Excel. We just want it to export to Excel. I believe this may work with other spreadsheet programs, but I have not been out there and tested all the other spreadsheet programs. I've only worked with Microsoft Excel. Okay. But others have told me that it works with others. Now I'm going to bring up our Microsoft Excel blank worksheet. And when we said export, basically it's saving a copy out in the computer's short-term memory. Okay, that's called the clipboard. And we are going to do a Control V, which is a paste command, and it's going to bring over what we just exported because it was sitting out there in the short-term memory. Now, we don't need all of these columns here. We are just going to go grab, starting here at Tesla. We see Tesla, NVIDIA. We're going to go down the list here, and we're just going to highlight them. Last one looks like dash. I'm going to do a copy, so Control C again. And then what we're going to do is we're going to add them to our short verticals watch list. So make sure this is sitting right here. Select on it. Select import. And then we're going to choose the option here. We're not going to go out to a file. We're going to choose this top one that says paste symbols from clipboard. When we did a Control C on that spreadsheet, it highlighted and put in the short-term memory all that list of ticker symbols. So now we're just going to say paste from the clipboard, and look at there, Tesla, NVIDIA, Google. Yep, all the guys we saw. If they are already on the list, it's not going to duplicate it. Okay, it's only going to add the things that are new. Then we're going to say add to current symbols. If I didn't switch that, it would replace that watch list. We don't want to do that. We're augmenting it. So that's why we're choosing add to the current symbols. We're going to hit OK. And now I'm going to share this watch list with you if you would like to use it as well. And I'm going to encourage you to do paper trading off of this watch list. And we're going to be using it every week as we come back and look for trading examples. This is what we're going to use. Anytime we share a scan with you, you need to know it's not guaranteed as to accuracy and timing. And because it's a fixed list, it's not based on a scan that we've saved, it'll just stay permanent, okay, as we save this. So I'm going to come out here, I'm going to say share, and we're going to come out here to SB class 72425, and I'm going to say share this. Going to give us a URL. I'm going to paste this out in the chat. And those of you that are here live will be able to see that. Those of you that are listening to this on the recording, what I'm going to do is I'm going to come up here to my scratch pad. I'm going to paste it out here. You might need to pause and then just go and retype what you see right here. It is cap sensitive. Now, see, it says, if you do not select NASDAQ 100, will scan not pull up all the stocks? Well, I wanted it to run across the NASDAQ 100. I want us to have a subsection of that list and a subsection of the S&P 500 list. Okay, so that's why we're intersecting it with, because if we didn't, it would go back to the original criteria. Actually, it wouldn't, because we have penny increment options here. It would show us all the penny increment options, but we want to whittle it down. We still want them to be worth 40 bucks. We still want them to have 2.5 million in average volume. Okay. And so that's why we're doing that. So hopefully that makes sense. See ya. All right. All right. Let's use the list here. Now, let me open up the watch list. And of course, I ran this scan earlier. Okay, I built our watch list earlier, and the examples that we're going to use today are on the list. So the first one up is going to be our lovely, we've got it selected, so it'll show up here and up there, our lovely, where did it go? NVIDIA. NVIDIA, baby, where did you go? You were on here once upon a time. I'm going to just type in NVIDIA here, and it should highlight it. Okay, there he is. Right there's our NVIDIA. All right, what's the next step? We've got our watch list. We go back, we review our watch list, and then we move on to the next step, which is looking for an entry signal. That's why we just kind of reviewed that off the slides is, okay, what are we looking for? We're looking for bounces off of a moving average or a horizontal or diagonal support, or we're looking for breakouts above resistance or breakouts out of a pattern. Or a hold, close above the high of the low day is one way that we might measure a bounce. Okay, let's highlight this. Let's zoom in here. What have we got going on here? I actually don't have any moving averages on here right now. That's fine. With our eyes visually, we can see this stock has been making higher highs, higher lows. In fact, when it makes a little bit of a low, it hasn't been pulling back all that far. It ran up here again. It had 3 days of pulling back. This was our low day in the pullback. Yesterday, it was a bullish candle, but it didn't close higher than the high of the low day. Today, it's moving. It's trading above the high of this low day. Market's still open for a little bit of time. So could this candle change and pull back and really not close there? It could. Okay, but we're going to go with the idea that it traded above the high of the low day. We want to be aware of earnings. So in all the stocks that we look at, there are going to be some of you that are like, I don't want to trade over earnings. I don't like it. And so a lot of times we will not trade over earnings. And the examples we use today, we're particularly paying attention. When is earnings? So I've got my 4 weeks out here. And it looks like they're not for a while. They're going to be at the end of August, about August 27th. So could our trade be done before then? Oh, absolutely, positively, it could be done before then. In fact, we'll want to make sure that it is. All right, let's come over here to our trade tab. What's our next step? If you've been following along, I hope in your brain you're going, oh yeah, the next step is to find what contracts we want to use. Okay, if you said that out loud into your computer or you chatted it in here, you bet. Let's see, Harry says, I have 39 members in the combined watch list. Isn't it the same number before you intersected the two lists? We've got a lot more than 39 there. I don't know how many are duplicates, but remember we added it to the first, we added the NASDAQ scan that we did last. We added that to what we had already scanned in the S&P 500. So we already had 111 symbols. We added more symbols to it. Some of them were duplicates, so it didn't add them on there twice. But yeah, our watch list is quite a bit longer than 39 here. Okay. We did start out with 111 and it's probably 120 something now, or maybe higher. Okay. Hopefully that makes sense, Harry. Bruce, kind of what you're asking there is really not part of our discussion here today about cash and T-bonds. Okay. All right. Yeah, see, it says if I wanted to find NVIDIA, I could select symbol and it would do them alphabetically. And that's true, it would. I will tell you, honestly, though, my personal procedure for walking through these is I will sort it on percent change and just see, okay, is the market bullish or bearish today? Great. What is it has been? Is my posture bullish or bearish? And then I'll focus on those that are moving bullishly. Okay, so I wanted to kind of do it in a way that would be typical. Okay, so there's our NVIDIA, but I appreciate you knowing you could do that because then you can find it. All right, Time. How much time in a short vertical do we typically want to sell? Okay, ding, ding, ding. Hopefully in your head, you know the magic answer. How much time do we want to sell? Typically between 20 to 40 days. Sometimes we might have to go out to 20 to 50 days. Okay, so we're looking to sell sometime. And the last 30 days of an option's life is when it really time decay starts moving very quickly. That theta that keeps track of how much decay that we get in a single day, that number tends to get bigger as we approach options expiration. So we're trying to find a balance. I mean, we could come out here and sell November contracts or December contracts. They're going to have a very low theta value, which means we're going to have to wait a really long time for them to decay. So we're trying to kind of find a sweet spot there. And that's why a lot of traders like to use that 20 to 50 day range. Paula says, I like to go 14 to 21 days. Absolutely. The URL, Jeff says, how do I use this URL that I pasted out here in the chat? What you're going to want to do here, Jeff, is, let me see where I posted it here. I think it's right smack here. What you're going to do is you're going to grab, you could grab the whole URL if you want. I'll just grab the whole thing, or just after the front slash starting with the exclamation point. All right, do a copy, go to setup, open shared item, copy over. I'm just going to do a control paste, and then you're going to hit preview. And then this is what I've called it. SV class 7/24/25, today's date. I've already got it in here, so it's giving me a value of a 1 in parentheses. I'm not really going to bring it in again, but for you, you would hit import. Remember, that's what the watch list name is, and then you can come over here on the side, pull up the watch list, and go through the charts, just like what we're doing right now. Okay? So good clarification question for those of you who weren't quite sure about that step. Now, NVIDIA has quite a few, but quite honestly, we're going to use, in all our examples, we're going to use the August 15 dates. It's kind of towards the narrow end, the shorter end of that time span, 20 to 50 days, but we've got thousands and thousands of contracts. Okay, and NVIDIA is traded over 94,000 or million shares today. Look at these thousands of open interest contracts here. For bullish, we're going to do a short put vertical. Absolutely love. We could trade just about any of these strike prices, and no, there's a lot of open interest there. Now, what I had selected earlier, we'll see if it still makes sense. We're going to do 167.50, which is a 31 delta, and then we're going to go the next strike in sequence, that 165. If this didn't have a lot of open interest and we were worried about the number of contracts, we might spread it out a little bit to be a little bit more efficient, but we're going to use the $2.50 wide spread here. All right, I'm going to go to 65. I think we can get filled at 65. It was a little bit higher than that earlier. Okay. All right, what's our next step? We need to know, is this a good enough return? Is this worth pursuing? Okay, so we're going to determine what the return on our investment would be by taking our max theoretical gain of 65, dividing it by our max theoretical loss, which is going to be 2.5 minus 65 cents, which is going to give us $1.85. Okay, so here we're going to go 0.65 divided by $1.85. That's going to give us the percent return. Now this one's 35%. Many people might like that. If you don't like it, you can look for others. If you want a higher probability, you certainly could do that. Let me just kind of bring this down here. Our probability of expiring out of the money is this column here. It's only showing prob, but if I put my mouse on it, you can see it says OTM. And so we want something to expire out of the money here, right? We want to sell it out of the money. We'd love for it to expire out of the money and let us keep whatever that credit is, in this case, about 65 cents. Okay. If you wanted a bigger, maybe a higher probability and a lower percent return, you certainly could, right? Because you can see there's one at 72%, 77%, 81%. And you're trying to find that balance of what's comfortable to give you a good enough return but is also high probability. And most people will consider 60% plus as high probability. Okay, how many contracts can we do? In our class, we are willing to risk $1,500. Okay, so if we are going to risk 185 per set of contracts, let's see how many contracts we can do. We're going to divide that by 185. We can do 8 contracts. So we're going to. All right, so we're going to do our 8 contracts. What's our next step? Tell your dog, tell your computer screen. Yeah, Kevin's helping you out there, what you need to do with that URL. Thank you, Kevin. Okay. We want to, if we can get a chunk of this, like a big chunk, then we're going to get out of the trade early. Last week, we focused a little bit on exit signals. And one of the things we talked about was if we can get a decent part of it, we're going to get out early. We're not going to hold out for all 65 cents. If we get a chunk of it, we're going to take our profits, be on our way, and move on to another trade. Okay. So in this case, if we have a 65-cent credit, and if we can get here, say, 75% of the gain, then 25% is left. Let's multiply this by 0.25. And that says, okay, go buy it back at 16 cents. So we're going to put in a first trigger sequential, create an opposite order. That'll bring our contracts over here. And we're going to change that 65 cents to 16 cents. And we're going to make it good till canceled. And then we're going to let the Thinkorswim software do the work for us to capture that and get us out of the trade. By the time it gets down to so it's only worth 16 cents, you get to the point you're like, well, is it worth risking what I've already got to gain 5 cents, 8 cents? You're kind of like, maybe not. Maybe if I get that 75%, I'll be happy camper, be on my way. Okay, that's the idea here. So we're going to hit confirm and send. We're going to put this over into our bullish short vertical bucket. Going to send it on its way. All right. John wants to know, where did I get the 185? The 185 came from this. It's a $2.50 wide spreads, 167.50 and 165. So that's 2.5. And then I subtracted the credit right now, which is 0.65. And that's where I got the 185. Okay, that's where that came from. I may have moved through that stuff a little fast there. So yeah, Sia's helping out there as well. Sia says, let's see, Sia says divide 65 cents between the strike price. It's actually, you have to do the strike price minus the credit. So you have to do the strike price minus, I'll just bring this up here again, our sell vertical. All right, it's right now at 64 cents, but you have to take 2.5 minus the credit to get our theoretical max loss. Okay. All right. You're thinking it comes out to about 31%. What did mine come out to? 0.65 divided by 1.85 was about 35%. So not sure what the difference is, the way you're punching numbers and the way I am, Sia, but we're going to go with our 35% here. Okay, we've got another one I want to look at here. Let's delete this. Let's go to our chart. We're going to collapse that. Next stock on the list. Let's see if this still looks good. I brought up a ton of these, and we'll see which ones still look viable. It was going to be Dash. All right, so let me just type Dash in here. Dash is kind of in the middle of the grouping there. What's going on with Dash? Does it have an entry signal for us? We used it for another trade back here, and that trade is actually from a different class, okay, that we're keeping track of that we got in on this day. What would the entry signal be like right here? We've had a pullback. We've had a little bit of a run up, kind of a 2-day pullback. We've got a hammer candle here. Yesterday, I'm going to call it hammer-like candle. And then but it didn't close above the high of the low day here. So here today, it's moving. It's trading above the high of the low candle day in this little 2-day pullback. Okay, so again, we've got another hold. Are we worried about resistance up here? Since there's room for it to move, we're really not, because we just want it to stay above a certain price. Okay, for this next trade, we'll come back to the chart and look and see where that price sits relative where the stock is. Okay, so on Dash, there's the other series I have in the different class along vertical. We're going to go to the put side of things. We're still going to use August strike prices. And notice here's my open interest column. We've got 699 here on this 31 delta, but we've only got 16 here, only 7 here. We've got 0 here. So quite a few more limitations. We're going to have to spread it out a little bit. We're going to have to go by 230, by 220, so that we're working with lots of open interest here. Okay, so be aware of that. And if you want to paper trade this alongside me, you are welcome to do it. So we're going to say sell vertical. And then we're going to change this down here to the 220. Oh, good. We just got filled. There's our 220. And I'm going to lock it. Okay. This is going to be a $10 white spread. Okay. So our $10 minus 2.65 is going to give us a value of $735. So we're going to be willing to risk $735, our max theoretical loss, to gain $265. And the price that we're going to be short is $230. How much leeway do we have below the price of the stock right now where we would want the stock to stay above? So $230 is right down here. So in its little pullback recently, it didn't even go down to $230. Okay, so we've got a lot of leeway. This stock can dilly-dally if it wants, right? Because time decay works in our favor. Ideally, would want it to move up so we could be locking in our gains. But above 230, yeah, we've got some clearance there, don't we? This stock could go down a little bit, right? It can even maybe go below 230 a little bit and we'll see if it pops back up, but we've got a lot of leeway. All right, let's run the numbers then. Let's see if 265 divided by 735 is a good enough return. 36%. Let's see here. Anybody else get 36%? Let's see. I think we've got a question here I need to answer from Carlos. Carlos says, this approach doesn't work for all traders. Carlos, let's see. Oh, it looks like Kevin's working with you on that. Okay, great. Thank you, Kevin. Appreciate you doing that. Chris says, we've got some earnings on this one. Okay, we're in it. Where is it? I wrote it down in my notes here. I didn't show you guys. Earnings is on August 6th. Today's the 24th. We've got about 2 weeks we can be in it. Could this trade be complete in two weeks? Yeah, it could be done in 2 weeks. It doesn't mean it will, but we mentally can say, all right, we don't want to be earnings after the market on August 6th, so we're going to be out by then. Okay, hopefully we will be. So on our 265, if what we have at risk was 735, let's see how many contracts we can do. 1,500 divided by 765 gives us a value. Oh, I did that wrong. I did it in the wrong order. Okay, 265 divided by 7.35, or maybe there were extra numbers in there. Gives us that 36%, which is good enough. We like that. Okay, how many contracts can we do? 1,500 divided by our risk, 735. We can do 2 contracts here. Okay, so wider spread, so that value of risk is higher. All right, so we can only do 2 in this one. If you're trading a smaller account, that might not work as well for you to do that. But we're just going to do the same thing. The first trigger sequential, create an opposite order. And on this one, 265, if we get 70% of it, let's go out. So we'll multiply that by 0.3. That says, okay, if you get 79 cents, we're going to be happy campers. We're not going to try to bleed every little last penny out of the spread. It's so canceled. And we're going to send this on to our bullish short verticals bucket here as well. Now, I've put in a target to get out. When might it go against us and we decide to get out or change the trade, right? It's not all of them that are going to work for us. I mean, we would love it and be on cloud nine if they did, right? But what if they don't? Okay. What if, say, Dash comes down here and maybe it trades lower than this low in this little pullback? I mean, if it got lower than this, it might be a little concerning. If it got lower than this one, yeah, it might be concerning. It still might be above 230, but maybe a significant move below 230. We might decide, if we don't have much time left for the stock to recover, we might consider getting out there. If it's giving us an indication that things just aren't working out, it's not being bullish, maybe they have bad news, whatever the case might be, then yeah, we're going to consider getting out early for that as well. Okay, so we've got those two trades that we're putting on new. There's a couple of others you might want to go back and just use. They came from this watch list. A couple of other stocks you might want to take a look at before we monitor our trades here. So Walmart, what's Walmart doing? Well, it's in an ascending triangle, right? The high points are getting lower, but the low points are getting higher. So it's in this triangle. Sometimes some people might want to get in on kind of this bounce off this lower side of the triangle. That can be a legitimate entry. This is an old trade, I guess, we did in June. We can get rid of that, remove that drawing, okay? But that could be a kind of a bounce type entry here. Another stock you might want to take a look at from the list, PLTR. What's it got going on as far as an entry? Well, we have a 3-day pullback. Yesterday, it gave us a close above the high of the low day. Today, there's a little bit of follow through, but it's not a ton, meaning it hasn't marched off without us. Okay, so some traders might consider that. And then ORCL, Oracle, not Poracle, Oracle. What's going on with this? We can see it's in higher highs, higher lows, nice little uptrend, nice little 3-day pullback. Yesterday, did it close above the high of the low day? It was just a tiny bit short. That high is 242.29. Right now, it's a 242.68. So right now, it is trading above our high of the low day here. Okay. We don't have time to put on trades there, but if you want to practice with some that are on that watch list, those might be some decent candidates to take a look at. Now, we're not going to spend a lot of time here because mostly our trades are just working, and many times these short verticals are trades of patience, okay? Earlier today, though, one of our stocks hit their target we put in. This is Mongo database. Mongo, we got in here last week. What did it do? Pop, 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 pop. Ran up really high today, hit our target. It actually ran up even a little bit higher, but then it started to pull back. We were glad we had our target in there to get out at a majority of the gain. On this one, we ended up, we brought in a credit of 310 and we bought it back for 60 cents. Great. We made 250. We had 2 contracts. That's $500. Good, nice little base hit, right? Solid. One other one that I want to show you that kind of gets into this area of trades of patience is Etsy. Etsy we did a couple of weeks ago. Okay, so on Etsy, it actually pulled back a little bit. Here's our line here of 55 where our short strike is. It's well above it. Okay, we don't have any concerns. It just isn't quite as high as maybe what we had wanted, but if somebody wanted to go buy it back and say, I'm happy with the profits, they could consider doing that. Etsy, we're up on it right now about $320. Okay, so yeah, could you do that if you wanted to? You absolutely could. It looks like maybe it's running up into maybe what was a resistance area. So our expectation is that it could pull back. Might not be as profitable tomorrow as it is right now, right this minute, but it's still in pretty good shape. Time decay is working for us. So we're going to just let it work. Okay. And actually our other trades that are on there in this area, they all need more time to work. Most of them are working out pretty good. And then Dash is the one we just put on here right now. All right. So today we put on 2 new trades. We rebuilt our watch list. Hopefully you stuck around so you could see how we did this. And then you can use it as a watch list so that you can be practicing this strategy. And I'll tell you, the best way to get comfortable with a strategy is to paper trade it. Okay. And if you do some of the examples we're doing in our class, when you're going through the trade, your mind kind of thinks of these questions, and then you can ask me while we're in the session, hey, this is happening, what do you think? And we can explore what's going on. But you lose the experience if you don't do the paper trade. Okay, so that's my homework for you, is whether it's some of them are the ones we did here in our class, or if there are other ones off the watch list that you like better, do some paper trading on it so you're getting really comfortable. All right, you guys, my time is up. I've got to get out of here. Kevin, thank you so much for helping out in the chat. I did not see any survey out there today, but if this was helpful to you, hit the like button on the way out. We'd love for you to follow us on our Trader Talks channel. Be a subscriber there. Kevin and I would love your follow. I'm Connie Hill CS. He's Kevin Horner CS on X. All right. Next up is scripting studies with Mike Fairborn. He does an absolute fabulous job there. If you want to understand Think Scripting better, he teaches you in the class coming up right at the top of the hour. All right, we'll see you back then. Thanks, everyone. Bye-bye.